Yo, what's up, guys? Welcome to another video. Sorry about the Zoom call. Couldn't record it because my PC was being extremely weird. So, yeah, I literally deleted everything. This is a brand new setup. So, yeah. Yeah. So, let me just quickly go over gold because that's mainly what I wanted to go over on the Zoom call. So, let's just quickly go over gold right now. So, my bad about that. So, gold is basically right now, like currently speaking, gold is bearish. Now, obviously, if we zoom out from here, we'll say, okay, gold is pretty bullish, but like, come on, we can't be using this type of information going like, oh, look, the order flow is up. Like we can't do that, specifically because the price action that happened over here and over here, it was, majority of it was fundamental, and it was basically news driven, right? Like, for example, mid 2020 pandemic started, which was around like over here, and that's what caused this major rally on gold. And obviously no one was expecting that when price was around like, what's that, like 1200, I don't know, 1000, whatever. So yeah, so we're gonna have to stick to this type of information we have right here. So overall, we can definitely see that gold is moving in like a 1 2 3 lower low lower high market, right? We can definitely see that price is creating lower lows lower highs on this macro type of structure. We have this high right here, we have a low, lower high, and we have a lower low. So overall, you can technically say that gold is pretty bearish. Now, obviously, gold, DXY, and majority of the news, majority of the USD pairs, the reason that USD is bearish is because of all the negative impact that the news is giving to the US dollar, and the reason that gold is moving so bullish, like we're seeing these big bullish rallies, it's specifically because obviously we know the US dollar is weak, and if the US is weak, gold goes up, and if the US is strong, gold goes down. So we can see that right over here at this point in the market, at around, I think that's 1913. If we go to the compare thing, I think that's like right here, and we'll go type in DXY, we can see right over here, this is exactly when gold started selling off. This is when US dollar started gaining some strength. So generally what that means is that DXY, the reason this move happened is because the DXY was strong, right? And that means that that gold is going to be weak. So we can see the correlation, not correlation, but we can see the opposite correlation between these two pairs. So let me quickly just get rid of this. Boom. So now future things that I'm seeing for gold. Now, even though gold is pretty bearish, currently speaking, just by technicals, fundamentally news wise, it's bullish, right? We all know gold is bullish due to news. There's so much horrible U.S. the U.S. economy is literally like a 5-year-old running a meeting. If you put a 5-year-old in a business meeting, nothing productive would happen, right? And that's basically what the U.S. economy is right now. It's horrible, but obviously there's manipulation, political, treatments where political parties say certain things just to give the stock market, the DXY, the forex market, these big moves that we're expecting. So we see this big move down on gold. This could easily be seen as the market going down to take out the liquidity that lies right over here. Now, a lot of people will call me crazy saying, wow, you think gold is going to sell off all the way down to like the 1600, 1500 area? Yes, I do, and let me tell you guys why. Now, as gold is still bullish fundamentally, we can still see that the market is still creating these lower lows, lower highs in the market. From this move down right here, we can see that this was our expansion move down. Let me get my tool. Let me highlight this. So this right here was clearly our expansion move down. I'm not sure why my tool isn't working. My bad, guys. I have to move this right here, and boom. So this was our expansion move down. Now the expansion move down clearly finished just about here. This is where the expansion finished, and this is where the market went into retracement mode. Now the market pushed up, started going into retracement mode right here, and we can see that price ended up reacting off of an institutional candle right over here. Perfectly came back into this buy to sell move down, mitigated that institutional candle. That's number one, and then went down. Now, I'm not gonna get in the in depth of why this IC was used. We all know why. The market generated liquidity here, took it, sweep the liquidity, and then went down and broke structure, creating new lows. So we know that this was the retracement. Now from here, the market sold off once again. So obviously this is our new level of price, or our new area of expansion rather. Price pushes down from here and it pushes down. That's it. It just pushes down. Let's keep this simple. Price pushed down over here, retrace, and then push down once again. Now when price expanded down over here, what did it do? It came back into the last institutional candle. Now same thing right here. The market pushed down. What did we do? Well, we created an institutional candle right at the open of that expansion. So we're retesting that expansion move right over here. So we can see that overall structure on gold is pretty bearish. So if you are still buys or bullish on gold, for example, you're looking to buy at this IC, it's definitely possible you can possibly, you know, take the buy up to this IC maybe and take the sell back down. But overall, I'm still bearish until this point in the market where this liquidity gets grabbed. This LQ has to get grabbed. We all know it. It just has to. And possibly the market may test, you know, this IC down here. Now, this can obviously be seen as all this hype around gold where gold is bullish, buy, buy, buy. We can definitely see a big move driving gold all the way back down to here just to balance out price. So all these retailers, including us smart money traders, who are buying every single time gold does dip. Because like we know, when the market is just going to go bullish, everyone's buying and it's not going to work out. Long-term investors don't like that. You know, the long-term investors are the people with real money, with a real, what's the word, like a real name for themselves, right? For us, if like we say, oh, we bought right here, so what? You know, if Bill Gates is putting billions of dollars in gold, he's going to be pissed off if every single retail trader is buying gold as well. Because at the end of the day, if everyone buys in a financial market that is not centralized, that is not decentralized, obviously, you know, it's not going to turn out for the best. So that's what I'm saying. We are bearish until gold takes out this lick. Now, the way I would get involved in opportunities for gold is pretty simple. Now, after gold tapped into our institutional candle on the, you know, we already went over this. This was, I think, on like the daily time frame. Not too sure. Maybe the 12-hour. I'm not even sure. Oh, I think it was the second daily time frame actually. Yeah, there we go. So after gold tapped into our second daily time frame, we can go down to like the 12-hour, and we can just analyze structure. And for the people saying, okay, why'd you go down to the 12-hour? Remember, go to every single time frame. I don't have a specific rule of going from, you know, which time frame to which. Just go through every single time frame. Keep it simple. So we see gold taps in. As soon as it taps in, we can see that you have some type of, let's actually go down to the 1 hour and analyze the structure inside of this area. So as soon as gold taps in, we see price comes in once, has significant drive back down from here. So we have a nice sell-off. So price goes up. We're still creating higher highs, higher lows. Overall structure, still higher highs, higher lows. Now, as soon as we created this 1, 2, 3 move, we have a low, we have a high, we have a higher low, and then we have a higher high. We can say that our range is from here to here, right? So in order for us to possibly be bearish, sorry, I'm I'm really far away from my laptop screen and I don't have my glasses on, so it's hard to see. But yeah, so basically our range is from this low up to this high, specifically because this is that last higher low that created a higher high. In order for us to become bearish, we need to break past this higher low. This is the macro higher low that the market created. Now, as you can see, the market broke past it. Now, you have 2 points of interest that you could potentially focus on. One is, like I said, focus on the expansion down. So the first expansion down would be right over here, right? This is the first, or this is rather the second expansion down. Sorry, not the first. Let me mark this up, back down, boom. And then we have another one right over here, right? This is the market expanded. This is where the market retraced and then expanded once again. So you could have easily caught a sell, you know, found an institutional candle somewhere inside of here. And as you can see, price did end up tapping into some type of IC here. And then we did end up selling off. Now from here, let's go back to the 4-hour time frame to get an overall idea of what structure is doing now. So 4-hour time frame wise, just looking at this little bit of information, we can see that this is just a huge zone of manipulation right here, right? Now this is done. A bunch of different people have their own ideas of what's happening and what they're seeing. My own idea of what I'm seeing is that gold is simply manipulating, or AKA, you know, creating liquidity both sides of the market, as you guys did see in the institutional market cycle video. This should be really simple and familiar by now to understand. Let me just quickly do that. Liquidity bottom and then liquidity top. Perfect. So we can see that there's liquidity at the lows and the highs, and generally we want to see this liquidity get grabbed. That's basically our our outcome. We want to see that the market is consolidating over here to generate liquidity of buyers and sellers, to stop all the buyers and the sellers. Now our areas of interest, or rather focus to sell at, is simply going to be at this institutional candle right over here, this last bullish institutional candle before that major move down, and then we have another one, this last bullish institutional candle, that major move down. Now what's interesting is we broke a ton of macro structure right here on the 4 hour. We have this high, higher low, high, higher low, high. Now the market broke past a ton of structure. All right, so let me just quickly go back here, get this, and boom, we broke past a ton of structure. So generally, because we did break past a ton of structure, my overall areas of focus are just going to be those big moves down. So this is one major move down that I'm going to be focusing on, and another major move down I can be focusing on is right over here, because these are my overall levels of expansion. This is where the market expanded a ton. Now someone might say, okay, why don't you take this IC candle right here? Now technically, I think if you go down to like the 12 hour or maybe the 8 hour, yeah, on the 8 hour there's a pretty clean candle over here. You can technically sell that for sure, but like you got to think in terms of probability. What are the odds that gold is going to come all the way back up to here just to sell all the way back down? Most likely it's not going to do that. If we're creating liquidity above here and a brief above here, that means that gold is just manipulating in order to gather stop losses of sellers and buyers. So when the market does end up pushing up, it'll quickly stop everyone out and then make a move down. And then the move down is obviously going to be wherever the next liquidity is, which is over here and over here. So it is still possible that gold can come up to here, but I would not expect that. If that happens, then that's crazy. Now, in terms of our Fibonacci retracement, if we do take it from this high up to down to like this low, you can see that this one is just sorry, my bad. Let me close that. So yeah, this one is just our first institutional candle. It's just under the blue, so it's still valid, but it just isn't as probable. Well, if you took it from here, then obviously it wouldn't be in it. But if you took it from here, where for the actual move down started, which is right over here, and it ended right over here, you can see that it actually matches up inside of our blue Fibonacci zone, which we have more confluence. So we're actually more prone to pushing up into this area right here rather than this one, because this is just not discounted. So technically what you could do with this little bit of information is that the market could come up into this area. Now as it comes up into this POI, it doesn't necessarily mean don't look for sells at all. You could definitely catch a nice 100-200 pip move down, but it won't give you that crazy move down. It'll just give you a 100-200 pip move down, right? Now after that 200 pip move down, most likely gold is going to continue back up into our second point of interest, and this is where we can actually catch the major 1,000, 2,000, 3,000 pip move all the way back down to like our liquidity, which is right over here. Now I'm not good at math, but that's like 17802. That's 5 numbers, so that's like 1,780 pips from here down to here, right? Because with gold you have to subtract the last number. So yeah, so that's generally what I am seeing for gold. Now in terms of what's happening inside of this range, let's take a look. So inside of this range, it's extremely, by the way, I'm making a video on this, don't worry. Yeah, I'm making a video on this indicator, do not worry guys. But in terms of this range, now like I said, we're just creating liquidity both sides of the market. Right now we're creating liquidity over here where the market is creating equal lows at this point right here, and then there is an institutional candle over here. And if we go down to like maybe the 30-minute, or let's go down to like the 5-minute time frame, possibly we can find another one right over here. Perfect. So we have 2 potential POIs. So one thing we could do is we could take the buy from here or here up into our points of interest. That's one thing that we could possibly do. So that's if you are looking for catching the buy and the sell, right? If you do want to catch that, it's possible. So let's go to the 15-minute and let's actually mark up our points of interest. So the first POI would be just this one up to this one. Let's measure the zone. This is about a 30 pip zone. So this is 30 pips, not bad. Now if I wanted to mitigate this, we'll go down to the 14, mitigate it up to here. Let's go down to the 13. 13 not telling me much. 12, not a lot. 11, boom. Now 11, on the 11 minute time frame, we can, you know, mitigate it up to here. Now we can go to the 9 minute, sorry, the 10 minute. I completely skipped that. 10 minute time frame, not much. 9, 8, 7, you know, not much. 6. So obviously we can't refine it too much, you know, it's already been refined. We can't refine it anymore. Now you can go down to like the 4 minute and shit. Like you can refine it up to like this last down counter, but I don't recommend that, specifically because at that point most likely you're gonna miss the trade, right? And with gold, I'm usually more generous with the stop loss, so I put my stop loss just at the low of this wick right here. And this is 40 pips, not bad. 40 pip stop loss for gold, pretty normal. And yeah, now we also have another POI, which was the, I think the 30 it was, I'm not too sure. No, not the 30. Let's go down to like the 15. Not the 15. Let's go down to like the 5. Okay, there we go. So 5 minute time frame wise, we also have a second POI right over here, down up to here. So this last institutional down counter before that major move up. Now in this major move up, we actually did break some type of structure. You have this low, lower high, lower low, and the market did end up breaking structure, which does indicate that you can overall look for buys on gold in one of these levels. So that's generally what we are seeing right now. Yeah, so yeah. Yeah, I get confused on what to say now. I hate ending the videos because I love talking. But yeah, that's basically what I'm seeing for gold. I'm sending this out to the channel as we speak. You know, I'll do this right now. So I'm gonna end the video, send this out now. But yeah, thank you guys for watching. Peace out.